Coming up on Market to Market. What's next now that the votes have been tallied? Feeding millions from overlooked sources.
A lot of imports from steel.
Those stories and market analysis with Sue Martin next.
Just this last year.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, November 9 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Rural America had its voice heard as the largest number of voters in 5 decades turned out for the 2018 midterm elections. The economic report for the month leading up to Tuesday shows business leaders, farmers, and ranchers had been positioning themselves for the best economic outcome. October's CME Purdue Ag Barometer rose on optimism of higher crop prices and the USMCA trade agreement. The Producer Price Index moved 0.6% higher. Without the swings caused by volatile food and energy sectors, core PPI rose 0.5%. Seeing inflation mostly in check, the Fed left interest rates alone. The outcome of the midterms has more writing on it than just representation in your local legislature or in the halls of Congress. Some of the voting results from Tuesday's election are expected to have far-reaching effects on the farm economy. Peter Tubbs has the details.
Democrats won at least 30 congressional seats from Republicans in midterm elections Tuesday, giving the minority party control of the House in the coming 2019 congressional session. New members of the 116th Congress will be sworn in on January 3rd, and the change in leadership will have a ripple effect on Washington policy that shapes life in rural America. The long-debated 2018 Farm Bill may see a quick finish in the approaching lame duck session of Congress, which begins November 13th. Republicans in both the House and Senate had been working on increasing work requirements for Americans who receive SNAP benefits, but they may abandon the proposal in order to finish before the current session ends on December 14th.
The Farm Bill is working really well. I mean, we could have had it approved anytime, but we're looking to get work rules approved. The farmers want it. I'd like it. The problem is the Democrats are not giving us the 10 votes that we need. Everybody wants it. The farmers want it. But the Democrats are not approving the Farm Bill with work rules. We could have it very fast without the work rules, but we want the work rules in, and the Democrats just don't want to vote for that. So at some point, they'll have to pay maybe a price.
As I've been telling people for the last 6 months, the problem is not that we don't have work requirements. The problem is we've got all these waivers.
Colin Peterson, a Democrat from Minnesota who is expected to become chair of the House Agriculture Committee, has shown support for the Senate's version of the Farm Bill. Peterson has stated he has little desire to start over on the multi-billion-dollar piece of legislation.
So if that could get resolved this week, then, we'd have a bill ready by next week, and, everybody's going to be in town, and we could have a conference committee report and pop it out. My indication from talking to Pelosi and Hoyer and Clyburn, they're all in with me to get this done. So there is no, on the Democratic side in the House, there is no, indication or idea that we want to delay this thing whatsoever. So if it gets delayed, it's not going to be because of us.
The newly minted USMCA trade pact may become a point of conflict between the executive and legislative branches. The agreement has to be approved by Congress, and House Democrats may ask for new language on a variety of issues, including improved labor standards in Mexico. If the White House were to withdraw from NAFTA, negotiators would only have 6 months to settle any differences Congress has with the new trade deal. While USMCA waits for congressional approval and a presidential signature, the terms of NAFTA remain in effect. California voters approved a measure that may have an impact on agriculture beyond the state's borders. Proposition 12, which mandates any product from a chicken, laying hen, or pig that is sold in California must come from animals raised with minimum space requirements. The controversial measure was approved by over 60% of voters. The agriculture industry warned the new housing mandates would raise prices for both producers and consumers. Others expressed concern that the mandate could drive small and medium-sized producers out of business. For Market to Market, I'm Peter Tubbs.
The USDA estimates that 1 in 8 Americans are without reliable access to a sufficient quantity of affordable, nutritious food. And yet tons of food goes to waste every year. There is one big city group that is standing in the breach between the kitchen and the trash can. Peter Tubbs has more in our cover story.
The last of 22 refrigerated delivery trucks are loaded during the pre-dawn hours in Long Island City, New York. Soon each truck will begin its route to a different section of the 5 boroughs of New York City, delivering produce and canned goods to 500 food banks and soup kitchens. 1 million pounds of donated and recovered food is delivered by City Harvest food rescue trucks each week, helping fill the plates of the 1.3 million New Yorkers who are food insecure.
Basically, we're kind of the middleman. You come into our fold, and what we do for you is you tell us who you are, what you do, when you serve food, and who you serve, and the constraints of your agency. We try to tailor our deliveries to meet those criteria. That's how it works. Some of our agencies serve, 1,500 people in the course of a day.
City Harvest sits across the East River from Manhattan. When the group took over the home of a beer distributor in 2011, the 3-door loading dock expanded City Harvest's capacity and ability to accept temperature-sensitive products. Over 20% of households in New York City are defined as food insecure, meaning they either have fewer options than what is recommended by dietitians and the USDA, or a family that experienced skipped meals because they are unable to afford food.
So our goal is to fill that gap for people. It's an issue of people not having enough money to make ends meet, trying to get food on their table. So we specialize in fresh produce and perishable food. We want to get it out the door.
City Harvest was the first food recovery nonprofit in the world when it began in 1982. Among those making donations are local restaurants, green grocers, and produce wholesalers. Unused produce is picked up by City Harvest, which plays matchmaker with a hunger service charity elsewhere in the city. The recovered food is then sorted and delivered to a client that is able to distribute to those who are trying to make ends meet.
And we have a basic menu that we work off of, but then on any given day, City Harvest can come up and drop off pounds of fresh vegetables that they've rescued from the green market or they've gleaned from a farm in upstate New York. And, we have to change quickly and we have to react to that.
The Holy Apostle Soup Kitchen, housed in an Episcopalian church built in 1848, feeds over 1,000 guests each day at lunch. The value of City Harvest donation to Holy Apostle is valued at $300,000. What City Harvest believes is their secret weapon is a proprietary algorithm which calculates what food can be donated to which agency, depending on warehouse inventory and what each agency is capable of distributing. Each truck is loaded for the day based on the sales orders generated by the algorithm. The computer program helps agencies across the city receive a more equitable share of what is donated than the randomness of manually creating a distribution list each day. Some donations of recovered food originate with box meal companies that find themselves with surplus ingredients. Truckloads of raw ingredients are donated and sent directly to larger food pantries without passing through the City Harvest warehouse. A truckload of Canadian sweet corn is being unloaded one pallet at a time. The food distributor who originally purchased the sweet corn was unable to get it to retail stores in Quebec before it ripened. Everything was shipped to City Harvest, knowing it would be fed to those in need while still fresh. Timing produce delivery is a challenge for the grocery industry. Late harvests or shipping delays can result in surplus produce in supermarket warehouses that are unlikely to be delivered and sold to customers at their peak. The solution that makes more economic sense for most operations is to donate the surplus to organizations like City Harvest. The agency also supports growers from outside the region directly. If producers can pack leftover produce into distribution-ready containers, City Harvest can get the overruns to an end user, whether soup kitchen or family.
Sometimes if the farmer knew, we'll send the truck, all you have to do is load it up, no worries, we'll pay the bill. That is like music to their ears. If they knew that, once they hear that, they're loading up the truck and ready to go. So we pay the third-party freight, and we help the farmer with a little bit of a stipend.
The morning rush has slowed at the Sullivan Street Bakery in the Chelsea neighborhood of Manhattan. A City Harvest driver stops in to pick up a donation of baked goods that went unsold the previous day.
Obviously, as a manager, my job is to try and sell as much bread as I possibly can. But at the end of the day, it's really nice to know that City Harvest is going to collect our bread and it's going to go on and find a second life. Definitely makes you feel better about having that waste at the end of the day because it isn't wasted.
£14 million of recovered food from places like Sullivan Street Bakery represent 1/3 of City Harvest's annual distribution volume. Each pound recovered is a pound bypassing a landfill, an already scarce commodity in the densely populated Northeast. Each pound also represents a meal for a person living in New York who is food insecure.
We're doing things that genuinely enhance the quality of life of New Yorkers. And I get to see it. I really get to see it. And you can't put a price on that.
For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
The addition of Chinese production numbers and adjustments to domestic yield in the November WASDE pushed aside weather reports and weekly export numbers. For the week, December wheat lost 7 cents and the nearby corn contract fell 2 cents. The January soybean contract was flat as official yields were lowered and global ending stocks were adjusted higher. The December soybean meal contract fell $5.40 per ton. December cotton finished 70 cents lower per hundredweight. Over in the dairy parlor, December Class 3 milk futures lost 75 cents. The livestock market took it on the chin as the December cattle contract shed $2.50. January feeders nose-dived $5.95, and the December lean hog contract fell $2.33. In the currency markets, the U.S. dollar index improved 39 ticks. December crude oil dipped briefly below $60 to finish $2.95 lower per barrel, a 20% drop since October. COMEX gold plummeted $24.70 per ounce, and the Goldman Sachs Commodity Index dropped more than 11 points to finish at $439.10. Joining us now to offer insight on these and other trends is one of our regular market analysts, Sue Martin. Sue, welcome back.
Thank you, Delaney. It's nice to be here.
We definitely have no shortage of things to talk about this week, and I want to start this week, shake it up a little bit, and start with a social media question. We got a lot of great ones wanting your opinion this week, so let's start with a wheat question in particular. We've got Louise in Amy, Kansas. She said, Kansas, Oklahoma, Texas are way behind on wheat planting. What does that mean for final wheat acres? And additionally, does this mean that Kansas wheat acreage will be lower than it was in 2017 and 18?
Well, first off, I think the state of Kansas this last Monday was estimated at about 63% harvested. So that's pretty low, and this is week 43 of the year. So whenever you go into week 43 and you're under 75%, normally you will lose acres. And I would have to say the state of Kansas will lose wheat acres, and I would think prevent plant acres will be up. And so consequently, would it be as low as the very lowest we've been since, what was that, 1908 or whatever? It might not be quite that much, but I wouldn't be surprised that we do equal it at any rate. So yes.
So Sue, I'm not familiar with that year. How many acres then are we going to possibly give up?
Well, it's hard to say because I'm not sure how the USDA will attack the prevent plant. If they'll show that in the, keep it in the planted acres and then show harvest acres much less. I'm not sure how that will come out. But I will say in the scheme of things, there's so much moving parts here in the wheat market. It's a market that's acting very fatigued. And there's a lot of, it's seasonal too. It's behaving very seasonally. And there's a lot of seasonal trade recommendations, if you have services that recommend those, that all have selling wheat. One of them is buying beans this next week and selling KC May wheat. Another one is this week, where on the 8th of November, you sell corn and wheat, and you hold them, I think corn's into the 19th of November, and then the wheat's into December. But a lot of these trades go right on into December, and there's just a combination of them, long beans, short wheat, long beans, you know what I mean? It's just, and I think that's, everybody's looking at these seasonal trades, and they're using those and hitting wheat with the short side. And it's just like this market can't seem to muster up enough energy. And there's been years going back, well, since 1968, so the last 50 years, we've had 14 years in which wheat prices put a high in August. So it doesn't happen a lot. But in the years that we did, out of those 14, 10 of them went on to see on the December wheat higher highs again, and then the March would either peak with the D's or move on into January, February. Of the 4 that did not, 3 of them, of course, the market was just pure trash. It just went negative, negative, negative. The one that did go on and make higher highs was after the December expired. The market stayed negative, and then it was the March contract. I think what's also weighing over this wheat market is all the exports coming out of Russia.
Absolutely.
They've been weighing on this market heavily. When exporters started hearing that there might be restrictions coming at the turn of the year, they really started ramping up exports. And while they've slowed their pace, which slowed actually in August for a peak. So from then, normally last year, I think it was November, December, but they've slowed that pace, but they're still coming up and still being competitive and pushing wheat out the door.
Absolutely. So I think you summed wheat up nicely. So I'm going to move along here to corn, which also has a lot of moving parts. And we saw a WASDE report come out earlier this week. I want to attack the elephant in the room, and that was the carryover number, the global carryover number. Sue, walk us through what happened there. We doubled in size.
It was a surprise. I think the surprise for me was we knew the numbers were changing. On Wednesday, the Chinese National Bureau of Statistics came out and they revised all of their years for the past 10 years. The biggie,
is that common to do?
No,
okay.
No, it's not. But and there's been people in the trade that have often rumored that there was more stocks in China than what they were, what we were thinking there was. But they came out with, I think they added 53 million metric tons to 2017. And this one that surprised me was they came up with 42 million more hectares of corn. Well, each hectare is equivalent to 2.47 acres. So that's a lot of acres. Yeah. And it's like, how do you miss that? I mean, how do you miss that? So, there's a couple of things that could be going on. First off, they've been lowering their support prices to farmers. And part of that reason may be because they do have all this corn. But the other thing was they've really been ramping up their ethanol program by 2020. And so, of course, through that process, we were thinking if their stocks were so tight that we would get some of that business. So that's been kind of the disappointment in hearing these big numbers. China now accounts for 54% of the global stocks. But like wheat, I think, what do they have, 46%?
Yeah, it was a big number.
Yeah, so, and does that really come into play a lot of times in wheat? No, not really. And I don't think it should be any different in corn. The one thing that we have to realize is in the weather in 2012, 2013, 14, China endured a lot of typhoons. And I think in one year, I think it was in 2013, they had 13 typhoons. Their crop had to be a mess. Their storage facilities are not up to speed.
So that crop that they're sitting on, the quality is questionable.
Yes, it's very questionable. And so what else are you going to use it for but ethanol? And that could be another reason that speeded up that little shift towards ethanol. So I think, and another thing, if they are in need of corn, what are they going to do? They're going to try to talk the market down. With China, you always, you put more attention on what their actions are rather than their words. And, you know, can we believe anything they say?
Well, right. I mean, that was going to be one of my questions, Sue, was this a political move? I mean, it comes here in the midst of all the trade stuff going on. We've got a meeting set here between lower level officials that happened on Friday.
Yeah.
Feels a little bit fishy, Sue.
Well, it does. And I think the thing is that, you know, China's got a lot of debt too. They're carrying a lot of debt. And in the meantime, they know that President Trump, his one big ace now that he does have that Congress can't stop him on is trade. And so I think if there's any area he's going to try, it's going to be the stimulus in trade negotiations. And of course, China's trade deal is the one that's outstanding. So, and we need that to make agriculture great again. So there's a special pun on whatever.
We can talk about that later, Sue.
Yeah.
Let's talk about soybeans now. I was surprised today, on Friday, at where the markets closed. I mean, up, I think, 7 cents on the day. We didn't really have an extremely bullish WASDE report. What's going on there? Why did we see some strength here at the end of the week?
Well, I think the bean market, there's a couple of things going on there. First off, the yield dropped.
That's true.
And, you know, I think we had the yield drop in 2006 and 2007 as well. And this one dropped almost comparable to those 2 years in November. November declines are not a common thing, but it dropped because of the weights.
Yeah.
Basically, both corn and beans was on weights. And then what they did was they kind of tried to offset it a little bit with a drop in exports, because we all know our exports are running way behind. Soybean exports are 25% below what they were, what they should be according to the 5-year average. And so that's a little disappointing. Our meal exports are down, and so are soybean oil, just faintly, both of them, but still they're less. And so the USDA, WASDE, finally lowered those. And of course, then the end result was it shoved our carryout to an all-time record high. It was last month too, but
not
it's even
quite a
higher.
billion bushels.
No, but they're getting there.
Yeah.
You know, they're working on it. And so I would suspect that we'll see another reduction in January.
Another yield reduction in January?
I think so.
Okay.
And you've got a lot of bean acres not getting harvested, you know, as we talked in wheat. And I think with all the negativity that the bean market has had, I think that acres this next year might decline more than you think. We'll see what happens. But in the meantime, I think that when we look at this trade talk, there is, because of President Trump's tweet, and the state Chinese media followed up on it too, of positivity, I think that has set the floor under the bean market for a moment. Because they're worried these funds are heavy short in beans. And I think they've already started working out of some of those. And then with all these seasonal trades, there's one that comes up this next week where you buy July beans, sell Jan beans. There's just lots of that.
So let's continue this discussion, and specifically exports for Market Plus. We got to move on here. I want to talk about feeder cattle specifically. $5.95 we lost from this time last week. What's going on?
Well, the cattle market in general is really, it's had a lot of optimism in it, or optimists, I should say, but things just haven't been stacking up quite right. And we've had, because beans aren't getting harvested, wheat's not getting planted on the backside of that, therefore wheat pasture's not getting, it's running past. And so to buy cattle and put them out onto wheat pasture is just not happening. And in the meantime, the weather hasn't been real kind through Kansas and cattle country. So you've had muddy feedlots and what have you.
Sick animals.
Yeah, so I think the demand has slowed a little bit. Plus, we didn't have our deferred cattle contracts as strong as they really need to be, and producers weren't making money. So I think that has pushed, and the feeders have led the way down here. So they're getting a little overdone, but I'm not sure we're totally done yet. But the fat market.
So we haven't put in a bottom yet in feeders?
Well, there is a seasonality where you will put a low in the first week of November a lot of times. And we could have a low here because of being just overdone for a moment, lift the market a little bit, and then I think we roll right back down. I just don't see this market done just yet.
Okay, Sue, give me your 10-second thoughts on the hog markets.
Oh, good grief. I can't do anything in 10 seconds. The hog market, I think, is very bullish.
Sue, I'm going to cut you off right there.
Okay.
We're going to save that for Market Plus.
Okay.
Sue Martin, thank you so much.
Thank you.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. While you're there, check out our classroom. This virtual schoolroom allows you to explore the science, technology, and business of agriculture. Join us again next week when we'll explore how hay exporters have recovered from a dockside dispute that briefly closed their market. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.